thoughts on the session?
James, unfortunately a fairly disappointing session for the start of the week, particularly given those very strong leads that we had from the US and European markets on Friday. But it does look like we seem to lose a bit of momentum. Investors potentially sitting on the sidelines a little bit. We had a very strong performance last week on the market, up 2%, and of course for the month of October up about 4.4%. So potentially taking a little bit of a breather. We saw some very light volumes going through today, about $3.5 billion in the end. So I think that's a reflection that certainly investors were sitting on the sidelines a little bit. But I think there were probably a number of factors that weighed on the market today. Of course, that disappointing result coming through from Woolworths, which added pressure on that staples sector, was the worst performer. In terms of the materials sector, the second worst performer. We saw lower commodity prices coming through, iron ore, gold and silver, which all added pressure on a lot of those stocks. We saw BC Iron really taking a hit, as well as Fortescue, BHP and Rio, and of course a lot of those gold stocks. As you mentioned earlier, we did see some fairly weak data coming through from China as well. So all of that, I think, really together added pressure on the market today. Unfortunately, we did see a turnaround in some earlier positive momentum in that financial sector, but that couldn't continue for the rest of the day, and unfortunately did certainly come under a fair bit of pressure, closing down about 0.4% in the end.
At what point do they start looking attractive as a buy? I mean, down $1.76, sitting below $35. Is it starting to look good at the moment, or do you think there's further to go?
James, I think potentially there might be further to go. If we have a look at where the price is sitting at, it trades on a price to earnings ratio of about 18 times. So I think there has been a little bit of concern that they are looking fairly expensive up at those levels. So in our view, we would probably like it to drop a bit further, to trade at a PE of around 15 times or so. That probably is a bit more justified in our mind. So probably would like it to drop a bit further before we actually start to find some good value, some good buying opportunity in Woolworths, and particularly given the results that did come through today, certainly very disappointing in our view. Although looking at their home improvement section, Masters, that was certainly one of the positives that came out of it, seeing a bit of an improvement, certainly starting to look a bit better there. Masters up about 31%. So that was certainly quite encouraging, but I think we do remain fairly cautious, particularly in terms of poor trends continuing within Woolworths. I beg your pardon, within Big W, and of course their hotels as well, which were down about 1% for the quarter. So we think that those poor trends are likely to continue in FY15, and that's certainly going to continue to put pressure on increasing margins in that food and liquor segment. But if we look at the result, we actually did see a slowdown in comparable store sales in that food and liquor segment, from about 2.5% last quarter to about 2.1% this quarter. So that's been the one that's really been holding up Woolworths, but unfortunately did see a slowdown there. So I think there is a bit of concern around that. Also more capital required in terms of further growth potentially, and of course increased competition, as you were talking about. So I do think there are probably a number of factors weighing. We do remain a little bit cautious, and as I said earlier, I think we're probably waiting for that price to drop a little bit further.